we are going to talk about process costing. It's different from job costing, which is what we did in the last chapter. Job costing, we had specific separate jobs or batches of things we were running, and we kept track of by job. So a process, like it sounds, is you've got you're producing a bunch of the same thing, or you're doing a bunch of the same service, and it is all kind of the same thing getting cranked out at the end. So we're going to keep track of the process. So we're going to talk about what a process is, how the work in process inventories work. We are going to talk about the FIFO and the weighted average methods. There's no LIFO in process costing. If you think about it, if I am creating something like, I don't know, calculators, I'm making 1 million of these, it's a process, right? If you've got a process where part way through you start assembling the things, the calculators, you start assembling them, you get the parts, you put them together, there's not a point really where you could take it and have the last one in be the first one out, right? Because it's not until the end of the process that it's actually a unit that you could send anywhere. So you can't have LIFO in process costing. You can only have that in finished goods inventory costing to calculate cost of goods sold, because you actually have full complete units. So don't even worry about that. We just have weighted average and FIFO. All right, and we're not going to really talk about spoilage. Don't worry about that. All right. So a process is a large number of homogeneous products going through a series of processes. So it's pretty easy to imagine the calculator example. You have the assembly part of the process, right, where they gather all the pieces and put them together. And then maybe they have a packaging part of the assembly where they take the calculator and the instructions and they put them in a little plastic baggie. And then maybe they have the boxing part where they take those little plastic baggies full of calculators and put them all in a box and seal it up. So you kind of got a process you're working your way through. So each part of the process maybe adds a little bit of direct material, adds a little bit of direct labor, and adds some overhead, of course. So here's kind of an example. This is from your book. I believe it's talking about some kind of pharmacy product where you mix the product, you make it into a tablet, then you put it in a bottle and it goes to finished goods. So you've got 3 separate processes, and you can imagine at any point along the way you might be partially completed with the process, right? So you'd have a separate work in process here until you transfer it over. Then this would be a separate work in process, transfer it over, separate work in process, then it goes out to finished goods. Remember, in job costing, we just tracked everything with one work in process and sent it on to finished goods and sold it. All right, so here's your T accounts, right? So we've got 3 processes: blending, encapsulating, and bottling, and it eventually becomes finished goods. So in encapsulating, you are bringing in your direct materials, in blending, direct materials, direct labor, and overhead, and you work on them, and then eventually, when they're done, you send them to encapsulating, where they add direct material, direct labor, and overhead. I don't know why it says FL, it should say OH. And then when it's all done, they ship it on over to bottling, do the same thing, and then it eventually goes to finished goods. So you have this series of work in process inventories, and during any one of them, you're adding overhead, which of course is always the thing we have to figure out, right? So that's what process costing is. It's about figuring out how to move the costs along. You're going to create a production report, right? Because if you think about it, you're wanting to keep track of things and how they're going, because you're going to always have some work in process, right? If it's a true process, is pretty much continuous, so you're going to be constantly having new direct materials, new direct labor come in, and some going out, right? It's like, imagine like an assembly line where things are flowing along, and at the beginning they're not done at all, and at the end they're completely finished and going on. So you have to account for all your units, right? You have to have units to account for and units that you did account for, which means you've got costs to account for and costs you did account for. So you're going to have to keep track of that. So the features of a cost system that let us track these multiple work in process inventories and keep track of the units as we're going, right? Because at the end of the period, the month, the quarter, the year, we have to stop and do our financial accounting. So we have to say, well, how much costs are in that inventory and that inventory and that inventory? So it can be problematic because you have all these partially completed items, maybe, or maybe it's just a batch. So you can imagine making cookies or cakes or something, and so it's nothing until you pass it on to the next thing. So you have to figure out, well, how finished are we, and estimate all your costs in that work in process inventory. All right, so the features are, if you have a process costing system, it's because everything is kind of similar and the same, and they're just going through the same process. Manufacturing costs are accumulated in a period of time. There's a work in process account for each process. So like we saw, we'll have like 3 or 4 or 10 work in process accounts depending on how many different departments they go to. The cost flows are generally similar to job order costing: direct materials, direct labor, overhead, into work in process. But then instead of going to finished goods, it just goes to another work in process where they add more of the same. You're building up that cost. The production report makes sure that you can track it, so you got to have a production report. And then unit costs are computed by dividing departmental costs by the period for the output. So again, you have to determine your output for a period of time, even though really, if you imagine a factory floor on June 1st, that factory floor had some calculators that were just beginning and were just pieces everywhere, and some were basically finished except for like the plus button hasn't been put on or something, so they're like 99% finished, and all stages in between, right? If you think of it like an assembly line. What does that mean, right? Because we've got our direct materials and we've done some labor, but what is the actual cost of that work in process inventory? Because you have to assign a cost to that. So that's what this is about, really. Because it's easy to take finished units and say, oh, this is how much we spent. But in any given time period, there's going to be work in process that we have to cost. So that's the big issue with process costing and understanding how to do that. All right, so basic cost concepts still apply, right? So basically, for any costing, you're going to take all your costs. So you can track that. You know how much you spent total on direct materials. You know from your timesheets how much you spent for labor. You've been paying the bills, right? The utilities and the maintenance and the cleaning and all that. So you know how much you spent on overhead. How do you divide it up per unit, right? So that's the same idea. You get the total, you divide it by the number of units. The big issue here is that you've got to measure the units for the same period of time. So you're saying, okay, in the month of June, we spent this much for direct labor, this much for direct materials, and this much for overhead. You have to be able to say, here's how many units we made in June. It sounds easy till you start to realize that we have all those partial units in the work in process across all those different processes, right? So if you have a homogeneous thing that's repetitively produced, we can use this process costing approach, right? So check processing, changing oil, checking baggage. Oh, this is for services, no work in process inventory. So let's stop here, all right? Let's stop here, and then I'll talk specifically about process costing when there's not a work in process, and then we can skip on to the heavy duty stuff. All right.